sectors that people had been buying to shorten their duration, to limit their exposure to higher interest rates, sort of fell out of favor in 2014. Those are back in force in 2015. Loan funds had a great first quarter, up around, on average, about 5%. People have viewed loan funds as somewhat of a defensive positioning for their fixed income portfolios. Back a few years ago, when everyone thought the Fed was going to move in 2012, 2013, you saw a lot of investors get involved in loan closed-end funds, but in loan funds in general, whether it be mutual funds or flows were moving in that direction as people were looking to reduce duration to defend their fixed income portfolios from higher interest rates. People need to understand a few things in regards to closed-end fund loan funds. First of all, last year, tough year for the funds. A lot of the funds saw their share prices trade off, and so you saw the discounts widen on those funds. Now, the expectation this year is if the Fed does move, whether it be in June or somewhere in the third or fourth quarter, you can expect the move not to be a large move. It's going to be a very calculated move. They're going to see how these things sort of fall out in regards to how much they raise their interest rates. But a lot of people think, well, if I own the loan funds, I'm going to see my income go up because they're shorter duration and they're LIBOR based. What the people have to remember is you're probably not initially going to see income go up. Why? One of the reasons is many of these loans now have LIBOR floors that will limit the amount that the rates will move up until they hit a certain floor. Because LIBOR is at, let's call it 25 basis points or zero right now, these funds are a little bit away from those LIBOR floors. So you're going to need to see the Fed move probably anywhere from 75 to 100 basis points before you start to see income rise in these loan funds. Matter of fact, you may continue to see income fall in the loan funds, but people have to remember you're buying it to reduce your duration exposure in fixed income. Not necessarily to see the higher income right away, but to reduce your exposure to higher interest rates.
For more information and data on closed-end funds, visit our sponsor, CEFconnect.com, the authority on closed-end funds. This is Closed-End Fund News.